We're also watching the bank stocks taking a hit a little bit today. We mentioned some of this earlier. We're talking about banks in the Gulf region evacuating their offices with Iran after claiming one of its banks was hit. Now says banks and financial institutions, associated with the U.S. or Israel, Citibank and others, they could be targets. As we bring Doug Flynn in, Flynn Zito Capital Management, it speaks, Doug, to how, Iran has this ability to keep things chaotic in markets, whether it's attacking ships or the threat on the banks. I mean, I can tell you, speaking to people here in Dubai, you may have even heard us talking about it earlier in the show, there's real concern about like the financial district here, where like many cities, you got all the firms or a lot of them clustered together. What about this from a market perspective?
Yeah, I mean, they're going to do what they could possibly do if they can't do other things warlike. They're going to do other types of warlike activities, which is to disrupt the financial and the oil markets and do what they can. And so anything they can do to hurt economically companies and therefore by proxy the countries, I think that's part of what their game is, because they may be limited in other areas, so they're trying over here. So the market is just reacting to that, whether or not it's going to be anything long lasting. I don't believe so, but there's always that short-term reaction to what could possibly happen, as they do this.
Thing that could be long-lasting is potentially what's happening with oil, although that, you never know. But what about this IEA move today, which is a ton of oil being released, coupled or countering, the headlines from here, like the attacks on the ships near the Strait?
Yeah, it's a signal by the world that they're not going to be held hostage to this and let this result in a long-term crisis. It's a huge amount of oil they're releasing, and that's what it's for. It's meant to do, to offset oil supply shock, and so it will do that. Now, whether or not there's enough of that to handle the length of time that the Strait isn't really operable is sort of to be seen, and that's what ultimately this comes down to. And that's part of why oil prices still went up in this announcement, even though theoretically the oil prices should have gone down with the release of all of this oil that isn't getting through the Gulf. And so it went the other way because out there is still that unknown of how long it's really going to be before things open up. And that's what's going to run this whole thing, is how long is it going to be before they get back to normal with being able to ship normally through that strait. That's what I think ultimately this comes down to.
Do you have a sense of what investors are pricing in on that front, whether it's in the stock market or energy markets? Because the other day it was clear, before we went up to like 120, that people were pricing in a shorter rather than longer war. And then something kind of changed, and now it seems to change back again. Is there anything priced in now, or just uncertainty?
I think the premium you have now over the prices that, if you will, that were before the spike is sort of relative uncertainty. How it got to 100 and 120 was on the fact that this could have been much more longer lasting, and it could still, we don't know. So it's kind of hedging in between the two, if you will. It's not saying we're going back tomorrow, and it's not saying it's going to be very long lasting. So it's kind of playing both sides. That's why you're seeing this bounce around in this range right now. It's a very normal event. So I think it'll break, and then unfortunately it just takes a bit longer for it to translate down into the lower gas prices. And what I found is the prices go up 4 times as fast as they do come down at the pump from the result of the up and down. That's why it always seems to take longer on the way down.
All right, Doug. Thank you as always. Doug Flynn there.